So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha, and welcome back to The Daily Call. Today we are going to be talking about swing trading for options traders. So oftentimes I will get emails from people around the topic of swing trading or using day trading type techniques in options trading. And the thought process is always, well, Kirk, we can't really use options trading because we're trying to swing trade the stock or we're trying to day trade the stock. But I actually think that this marriage of swing trading or position trading around the market and options trading actually works really well. And I'll explain why. So whenever you do a regular swing type trade, or let's call it a day type trade, where you're trying to actually trade the underlying position. So you're swing trading Apple or day trading Apple, you are trading the actual physical stock of Apple. The problem with that is that you have to be right immediately in your directional assumption. So if you buy Apple stock for, say, $500 a share, then if it goes higher than $500 a share, you make money. But if it goes lower than $500 a share, you lose money, right? So you have to be pinpoint accuracy on your directional assumption. There's really no wiggle room in there. You either are right or wrong, and there's one line in the sand. I think when you start using options trading in conjunction with swing trading, if you want to go that route, then it gives you the ability to now trade a directional assumption. So let's say you still wanted to go long Apple, but instead of buying the stock, instead of trying to swing trade the stock itself, you use options trading. It now gives you the ability to have a margin of error or a cushion so that if you're wrong in your assumption, or maybe if you're wrong by $1 in your assumption early on, and then the stock does continue to move higher, you still have the ability to make money. So let's say now that if Apple was trading at, say, $500, theoretically, just to make everything round numbers and easy, and you thought that Apple was going to go higher, well, don't buy the stock at $500. Go ahead and sell, let's say, a put credit spread below the market at, say, $490 on the put side. So that's your short strike. That becomes a line in the sand. And if you're wrong and Apple doesn't move higher, at least you have the ability to make money as long as Apple stays above $490. So in this case, you could be wrong and the stock moves sideways, you still make money. You could be wrong and the stock goes down, but as long as it doesn't go below $490, you still have the ability to make money. So I think this marriage, this pairing of options trading, when people actually really think about it, it gives them such a margin of error and a cushion to be wrong and still generate expected income from a portfolio and still have the thrill, I guess, of swing trading and day trading or using technicals and chart patterns. You know, I'm not one of those people who use it all the time. It's something I look at for sure. Like I'll look at the technicals from our research. You know, I glance at chart patterns, but I by no means make major decisions based off of them. If you're that type of person that you love using chart patterns and Fibonacci's and, you know, technical analysis, great. Just now use options trading in conjunction with what you're already doing to create positions that have a little bit higher expected win rates than just flat out trying to trade the stock. And I think when people actually start gravitating towards this style and methodology of trading, it's actually a lot more comfortable. You become a lot more confident, and you still figure out a way to, you know, trade based on whatever indicators or analysis you use, but also layer in some risk protection on the backside. So hopefully this helps out. Just food for thought today. As always, if you guys have any questions, let me know. Until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from OptionAlpha.com.